Hello friends, welcome back to my channel. Please like, subscribe and also press the bell icon. So actually I'm making the video in mobile. I think that's why you can see off screen in if you're watching from the laptop. Please bear with me for that. So my next value pick, undervalued pick is Bank of Baroda, which is currently actually trading at 240 rupees. As you can see, market which has got a market cap of 1.23 lakh crores. So this is almost like 52 week low. So these two are the 52 week low and 52 week high prices. So 240 is almost near to 52 week low. So the book value is 326. So I'm expecting actually this should go back to 326. Time frame maybe 1.5 years time, which could be from this current level easily. It could be you know like so 50 to 60%. On a bullish basis this can go also to 400, because if you see back the chart, so it is always going up actually, if as you can see from 2020 onwards, and even the revenue as well as the profit is going up. So this is the here, yeah, I can see here revenue and all. You can see here this is going up only. So if you see in, for example, 2019, this was 52,000 crores revenue. This is almost reached actually 136 now. Similarly, the profit is always going up. So this has come down to 52-week low. There is one reason for that. That is because of the dip in the this quarter result. So in the last quarter result, as you can see, this was always having a profit of 5,100, 5,500, 5,872. Suddenly there is a dip of 2,800. I think that is why the market has punished. If you are a retail investor and a value buyer, I think this is the right opportunity. I think sometimes there are different kinds of players are there. The day traders, swing traders, and all those traders will be there. So their ball game is different, and our ball game is different as a long-term investor or value buyers. So that's why in our case, I think this is the right opportunity. As you can see here, the PU value is also less because of this one-time dip in the profit. I'll also give you the reason why it is less, why there was a dip in the profit. So this has come down. I think this is the right opportunity because the book value is 326. Currently this is also trading at just 0.74. I think this is one of the, for a banking sector, this is one of the undervalued valuation actually. Even another plus point or the bonus is they are going to give you 3.5% dividend. So if you put it in FD, I think it is 7% or something. It's almost half of the thing is you are getting it over by this dividend. And also PEG ratio is less, that is price to earning to growth ratio. I think we are expecting the profit next. I think that's why this is PEG ratio is also good. I think if it's less than 1, you should buy it. So let's quickly come back here. The reason for the dip in the profit. So just you can Google it or just go to ChatGPT and check it. So here there was one dispute was going on from a long term between the NMC group and the Bank of Baroda in the Abu Dhabi branch actually. So that's why this dispute was going on for a long time. So I think Bank of Baroda decided to settle this out of the court for an amount of 5,700 crores. I think that's why they actually booked it fully in this quarter. Because of that, this has come down. This is actually one time event. So if you can leave that 5,700 and if you can add it here, I think still this is actually kind of a very good profit this quarter also. It is actually kind of one time it in the profit. That's why I think if you see the next 3 quarters, I think the profit is going to come back to normality. I think even the price also eventually it has to come back. I think that is the right opportunity for us to accumulate the stock. If you are actually have a patience of 1 year, 1.5 year, easily you will get 50 to 60%. Or if it is bullish, if the market become bullish, then it can also go till 400. Only risk what I can see is the the war between Iran and US, because the Strait of Hormuz is still it is closed. The barrel price, the oil price per barrel is actually going between 80 to 100. If it is if it shoots up above 100, then it is a risk for India because of the the fuel prices, all the transportation prices will increase. Indirectly, it will increase us all the consumer goods prices, which will indirectly increase the inflation. Then, if the inflation is high, I think the consumption will come down. The banking sector or any other share market shares also can come down, which are dependent or which are relevant to inflation linked companies will come down. This is the only one risk I can see. So in terms of promoter holding and DIs and FIs holding, I think they are really good. Even FIs have increased in the last quarter. Even you can see here DIs are also, I think LIC has entered recently, and HDFC is still holding, and NPS Trust Fund, I think they have entered. Kotak Arbitrage has entered, SBI, BSE. So anyway, I think in if you see the public shareholding, I think it's very less. So in my opinion, this is an undervalued stock. If you're thinking for a long term, you can just accumulate it. At least 1 to 1.5 year time, this can double your money. I mean, it is on a bullish basis. So even if it is not double, at least it should reach 350.